Hello and welcome to the APW podcast. Today we're speaking to Arjun Kumar of Taxed, T-A-X-D. They're basically an accounting firm that's a mix between a traditional, all people-focused accounting firm and a all-online firm. So you get the benefits of lower costs from using an online platform, but you also get to speak to people. So we talked to him about the benefits of buying through a UK limited company and also his journey investing in property. So I hope you enjoy. Cheers. Hey Arjun.
Hey Callum, how you doing?
Good, yeah. How are you?
I'm good, thank you. I'm good. Kind of having to take it all in Singapore at the same time. This is lots happening.
Is it your first time?
First time. Yeah, I feel like half tourist, half meetings. I'm like still kind of looking around and sweating at the same time.
Oh, it's one of those things, I think. I was chatting to someone the other day saying I've been to all of these amazing places in Asia and all over the world meeting clients, but never done any of the touristy things, because you just you're in Singapore. Did you go to the Marina Bay Sands or did you go to the gardens? It's like, no, I've got work to do.
True. It's trying to mix some of the visiting the area whilst also doing some of those meetings. I'm planning a little run tomorrow around
Awesome.
the Marina Bay Sands.
Yeah.
Hopefully I'll get to see it then.
I think that's always a good way. Actually, that's how if you go out for a run in the morning or if you're there over a weekend, you actually get to see it and, get some fitness in as well. So I think that's how big is your run? What have you got planned?
So there's like the Marina Bay and then the Garden 10K.
Nice.
That's the plan. But at the same time, so I'm kind of from London, right? So I'm not used to the heat here. So I guess we'll see how it goes. I may stop off at a quick 2K.
What would you do a 10K in back home?
Maybe like 50 minutes.
Whoosh, rapid. Me and Drew here, we've got a picture of over there, hanging up or wherever it is, of us running the KL Marathon here last year.
Oh, nice.
We were so slow, that they were reopening the roads behind us and just made the 7-hour, 15-minute cutoff by 10 minutes. But that's because of you started at 3 a.m. because that's the coolest time. But actually, what you don't factor in is the fact that you've got 10,000 people squeezed into a city centre road and you're all waiting in your blocks, right? Block 1's the fastest, block 2, 3, etc. And so the first 10K was the hottest 10K of the whole thing because you're so bunched in and everyone's body heat is coming off you and there's no wind that first 10K from 3 to 4:30 in the morning for me was the hottest.
Oh, wow. Yeah, what was the kind of temperature as well? I can imagine kind of KL.
Still 29 or 26 maybe at 3 a.m. But we've been threatening to have a little chat on a podcast for a while, haven't we? So
it's good to finally jump on. Thanks for having us.
Thanks for coming on. I guess normally we speak with expats that also invest, so it's a little bit different today. You do invest in property, but you sort of help people that invest in property as well from a tax perspective. So maybe we can start with a bit of your background and then talk a little bit about tax perhaps, and then we'll just get into some questions.
Sounds good. My personal tax background actually started around 10 years ago. I joined PwC, not really understanding what they did, but I joined their international tax team, which at the time I was thinking, when am I going to use this overseas non-resident tax knowledge really? It's such a niche.
Yeah.
Fast forward 5 years, we set up Taxed, which the essential aim of it is to help expats who move in and out of the UK and overseas investors file their UK tax returns, their company accounts and their corporate tax. So really trying to focus in on individuals that are investing in the UK, or they may have left the UK but they still have a home in the UK, or looking to set up a bit of a property portfolio in the UK.
And so I think the good thing about you guys, so that's TAXD for anyone that's listening. So it's a slightly different model, right? Yours, it's not sort of a traditional accountancy where you would go and deal directly with a person all the time, but it's also not on the far end of fully tech where you're just online. Is that right? It's sort of that sweet spot where you've got tax experts such as yourself, and then you've also got sort of an online aspect to it.
Yeah, exactly that. We're kind of that hybrid. We found that the likes of the Big Four charge thousands per tax return. And then even high street accountants, as soon as they hear non-resident or overseas landlord, right, they kind of up the ticket price a little bit. So we knew that software would be a good approach to enable supporting these clients in general, it's still fairly easy. There are just complexities around the residence tests, etc.,
Yeah.
that software can handle. And then where there are questions, we have human tax experts that are able to support. So that's really, kind of, as you mentioned, that hybrid approach, software with a bit of human as well.
We've sort of known of you guys for, well, I guess a year or so now. And as I say, been trying to actually do a podcast or a webinar for ages, but it's not happened. But I think we're really sort of getting behind what you guys are doing now and starting to sort of send some people over your way. I know a couple of our clients recently started working with you. So for us, it's clients investing in properties. So I guess that's what we'll focus on. So what would the process look like? So we have a conversation with someone, we say, okay, what are your goals are? What are your goals? Obviously based on the 10 Steps to 10K book. We choose a property, we get ready to invest, and we say, okay, we're going to do it via a UK limited company because you're looking to build a portfolio of 3 or 4, and that'll be the most tax efficient way. We'll introduce you to tax. So what does that relationship look like then? Or what does the process look like once sort of clients come to you and get onboarded with you?
In that particular case, if someone wants to incorporate a company, we can help from that incorporation perspective onwards. So setting up the company, helping them set up the bank account, and then ensuring that the compliance with that company is all up to date. Things like the confirmation statement, and then when it comes to filing the company accounts and the corporate tax, we'll be able to handle that through our software. And that's where as well, we sometimes, depending on the client, might have some touch points throughout the year as well from a tax perspective, depending on what they're looking to do. Perhaps they want to invest in some new properties. We can provide some advice around, right, is it best to set up a new company for this, or is it best to actually just keep more properties within your singular company?
Yeah.
And I think that's where we can provide the ongoing support as well. It's not just the tax filings. Sometimes it is that additional bit of advice needed.
And then it's through an app or a portal or
a web app.
I don't really know what a portal is. A web app is what a portal is, right? I'm just saying techie words, app, portal.
So I guess it's a web application. So it's tax.com or tax.co.uk. Basically, on this portal, you're able to connect with our team. You're able to set the company up, to file the accounts, etc. And then obviously we use Teams or Google Meet, etc., to hold virtual calls with clients. We also have actually started doing in-person client events. We did one last week in Hong Kong, and it's really funny, right? Because we've got tens of thousands of clients now, but we don't meet any of them.
Yeah.
It's all like virtual, I guess. And then meeting some of our clients that have filed with us now for 3-4 years that love the software. And it's these are real people.
Yeah.
It's quite nice to see.
For sure, and I think actually expats appreciate that, I think, because you are so far away from home, and it's a big thing to invest in property. It takes a lot of time and money and effort, to be fair. So if you've got a team of people that you can trust, but also actually meet with in person, I think it builds that confidence. Is that what you're doing in Singapore? Same client meetings, or are you meeting partners?
It's a bit of both. It's a bit of the client meetings and kind of partner meetings as well. I think for us, it's establishing a bit more of a footprint in the Asia region. To be honest with you, hadn't been to Hong Kong or to Singapore prior to this week, so it's a little bit of getting a lay of the land. But also, I think now we do have a lot of clients here, so it's good to spend more time on the ground and kind of meet some of these clients. And as you said, to build that kind of trust in person, expats, it's good to create and to nurture those relationships.
Yeah, 100%. I think so, for sure.
Sorry to interrupt, but if you're enjoying this piece of content and would like to find out more about buying property and our key 10 steps to doing so, then pop your details in the link below somewhere and grab a copy of our book, 10 Steps to 10K, the Expat Property Playbook. Enjoy.
And so then the costing on your platform, is it, I guess, it obviously would be competitive compared to working with a sort of traditional accountant, because it's, a bit more automated, but how does it stack up? Is it much more expensive, much cheaper? What's the sort of, you don't have to say exact figures. I'm not sure whether they say, in sales, when you start talking about price, then you've lost the sale. So I don't know, maybe you don't want to talk about price exactly, but.
I mean, our prices are quite transparent, which is, I think, a good thing. Like, anyone who works with us, they know the price before they even start to work with us. There's no hidden fees, etc. So
Yeah.
for a personal tax return, it's £99. For company accounts and corporate tax, it is £299. And then for an advisory call, it's £100.
Yeah. Okay.
That's for a 30-minute call to kind of go through any queries. So it's very much like a menu. You choose exactly what you want. But then at the same time, we offer subscriptions that start at £30 per month that will cover the company accounts, corporate tax, and a personal tax return. So if you want all the tax filings and a call, it's £30 per month.
Yeah. Okay.
Which for, I think, a lot of overseas investors who are using limited companies now to invest in property, we're finding that to be quite attractive. That then covers their whole UK tax filing. They get a call included with it, and they don't need to worry about it. It's £30, which is inclusive of VAT.
Yeah. It's. I mean, it's cheaper than. I'm old school. I use actual accountants in an office somewhere, and send them emails and speak to them on the phone, and that the call's got to be scheduled a week or two ahead because they're, slow and whatever. But that is much more cost effective than that approach. I think I'm probably paying double that on an annual basis. So
No, yeah. I think that's certainly what we found in the market was lack of replies, lack of understanding sometimes. Like, there are some accountants that are great, that understand this market, the expat, the residency side of it really well. But in general, it's quite niche that you do need to find the right person. And if you do find the right person, they're probably going to be a bit more expensive. And therefore, it's for us, it's trying to bridge that gap.
Yeah, and I think that's why it's such an interesting model, because it is bridging the gap between that sort of full face-to-face, but you pay a big price for it, versus fully automated, where you often wish you had someone you could speak to when you need to speak to someone, and it's that sort of middle, okay, I'll speak to you when I want to speak to you, but the rest of the time, I won't.
Yeah, exactly that. And I think we find nowadays, like, although there are tax efficiencies with setting up a company, things like that, some of those tax efficiencies get taken away because of the price of admin.
Yeah.
So the price of even setting up a company, the price of doing the accounts, the bookkeeping, the confirmation statement, etc., they add up, and then if that takes away that efficiency, then it's sometimes not worth it. So for us, we found, since like the mortgage interest kind of changes in the UK and things like that, we've seen that rise in setting up of companies, and now able to support with the lower fees.
I think there was an article in the Telegraph a month or so ago that was saying that private companies for the use of buying and owning property are now the most prolific set of companies in the UK, over and above sort of retail stores, fast food chains, any other type of companies for properties. And what's the process then? Can you, if someone's already working with an accountant, asking for a friend, can you onboard them with you guys, or would that be easy to do?
Very easy, very easy. For us, there's not too much from an accounting perspective. All we need to do is understand things like the old authentication codes, UTR, and then just have the details of the income, expenses, completion statements, that kind of thing, for the current year. And then your old accounts, because within the accounting kind of documents, we just need to compare. So we just need the historic details and then the company admin details. So it's super easy.
Next, then, we can have a little bit of a chat about, because I know people that will be listening to this will sort of see the headline, So what are some of the benefits, would you say, of sort of buying property through a company as opposed to doing it in your own name?
Good question. And I think, to be honest with you, it really depends on the individual, whether they get a personal allowance in the UK. So that depends on nationality, tax residency, things like that. It also depends on what their future plans are. Are they going to come back to the UK?
Yeah.
Are they going to stay abroad? Are they going to potentially invest in other properties? Like, how much investments do they have in the UK? So looking at those kind of things will help determine whether it's best to set one up. Some of the pros certainly include being able to use mortgage interest as a full relief, which, to be honest, if in your personal name, is also fine, provided your income is under the 50,000 mark. Above that, then you're going to be getting hit. Also, it facilitates kind of co-investment. So you can invest in the property through a company with various shareholders, various directors. And also, when it comes to paying yourself, although you pay corporation tax in the company, if your only income from the UK is interest or dividends or investment income, there's no tax on it, because HMRC effectively, they don't regard that income from a tax calculation perspective. So you can withdraw your interest, withdraw your kind of dividends from the company without paying any UK personal tax.
Is that only if you're based overseas, or?
Only if you're based overseas.
Yeah.
And there is a caveat on that. If you leave the UK, there's a 5-year temporary non-residence rule for that. So let's say that you have a UK company, take loads of dividends out, and then within the 5 years of leaving the UK, you go back, then there's a tax charge. So
Okay.
that's just one thing to notice if an expat is planning to go back to the UK. Then at the same time, but when it comes to selling a property, selling a company is a bit more attractive because you're able to sell the company with the property associated with it. And then the new investor only pays stamp duty on the shares, which is a much lower rate than stamp duty on property.
I had a client recently, he's based up in Hong Kong actually, and we were looking at a block purchase for him, which was a nice old townhouse that had been turned into 7 flats, I think it was, and that was already within a company because the developer bought it that way, and then he was going to sell them as individual flats. But we were looking at the block purchase, and it was £1.8 million. And so the stamp duty on that would have been, if you were buying it as a property, would have been about 220,000 quid, I think. But buying it via the company, I think it was, is it 0.5, I think?
0.5%, yeah.
0.5, and it was 9,000 quid, which is what I paid on a £250,000 property, so it does make a big difference. And I think as more and more people buy via a company, you'll sort of start having a second-hand market where people just buy the companies instead of the properties. And then we've got the MIRAS, the mortgage interest relief at source. Is that what the S stands for?
Mortgage interest relief, yeah, that's it.
So we've got that as well. Do you want to tell us a little bit about what that is?
Sure. So I guess from 2020 onwards, mortgage interest is no longer used as a full deduction when it's in your personal name. So you only get 20% as a tax credit, which means if you're a higher rate taxpayer, so if you have over £50,000 of UK income, that mortgage interest, you're paying tax on the full amount, but then you only get 20% back, reducing your tax bill. So effectively, you pay an extra 20% of tax if you are a higher 40% rate taxpayer.
Yeah.
Whereas in a company, it's treated as a normal expense. So you've got your rental income, you reduce it by your mortgage interest, taxed on profits. Easier, it makes sense. But for reasons I don't actually know, I guess the UK government went down the route of treating it a bit differently a few years ago. And I guess that's pushed a lot of people to setting up companies. I think when we're talking about the surge in setting up companies, and I think you mentioned the article in the newspapers around it, we looked at this data. It was around 100 to 200,000 SPVs, or kind of companies set up for kind of buy-to-lets prior to 2019. And now there's over 600,000. So just in those few years, there's a huge amount of companies being set up.
I think it's positive though, isn't it? Because it's sort of forced people to, there's no longer the sort of accidental mum and dad landlord, it's more of a professional thing now, and you've got to do it properly, which is good for tenants as well, because you've got professional landlords that are looking after you as opposed to just, I've got this spare property, let's put someone in it. So I think it's positive, and it gives the UK government more clarity, right? They know exactly how many property companies there are. It's crystal clear on the tax side, so you can't sort of just have 6 properties and not declare it, as I'm sure some people would have done. So I think it's sort of win-win. Obviously not me, not you either, I'm sure, none of our listeners. So yeah, it's positive to all that, and I think very powerful. And then also, obviously, you can sort of deduct anything to do with that. If you buy furniture, deduct that. If you've got workmen going around, you can deduct that. And even depends how far you want to push it, but you could even, if you're living overseas and you're going back to specifically to view properties, then you could airfares could go on there as well, because that's a business expense, right? So there's lots of ways you can use that company to deduct down to, okay, I may have made £50,000, but I'm paying the tax on 5. you know.
Exactly that. I think as well, one of the lesser known benefits that people will start to see in the next couple of years is by using a limited company, they're not brought under HMRC's new tax regime, MTD,
Yeah.
which means that personal landlords may need to file every quarter. So a quarterly update filing to HMRC is a lot more admin than we used to, right? Than filing an annual tax return. But through a company, it's still the company accounts and corporate tax process. But personal landlords earning over 20K will need to file every quarter.
Yeah.
So it saves a lot of admin on that.
For sure. Yeah. And I think there's heaps and heaps of benefits to it. And I think, the sort of, should you use a limited company, as you said earlier, it depends totally on your situation and everyone is very different. But I think we sort of use as a rule, if you're ever going to move back to the UK and work, definitely, because you ring fence that income. And if you're going to look at 2 to 3 or more, depending on the value of those, then definitely use a company, because those are the sorts of things that will push you into higher tax brackets if it's in your personal name. If you've got £12,000 from property income and you move back to the UK, then you've already used up all of your personal tax-free allowance. So it's or if you're married and you've got 25 grand and you get 3 properties, maybe it's around 20 grand. So maybe you keep them in your own name if you're not going to move back. But yeah, those would be the key things we look for. Are you going to move back, and how many are you going to buy? And then it sort of starts to make sense as to which sort of way you should go with it. What about, if you're happy to talk about it, you don't have to if you don't want to, sort of your own investment journey? Because I think one of the sort of benefits of these podcasts is people get to listen to people that have invested in property and get to sort of pick up tidbits and pearls of information. So what is your sort of approach to investing? Have you got a set strategy? You're one of these guys that's flip to flip or BRRR, or what's your ethos when it comes to property for yourself?
For me personally, as passive as possible. So not
good.
It's I think it's something that I may look to do in the future. Have as a bit of a project back in the UK, but I think at the moment we have a property up in Liverpool. So for me personally, it's kind of getting started with investing in the UK. I've also just going to purchase the property in London, but to live in. But that in the future might be one that we rent out when I move to KL or Singapore or Hong Kong.
Get yourself to KL. It's the place to be.
But certainly looking at things that are quite passive at the moment.
Yeah.
I think personally it's something that I'd like to just create, that passive income, get to around that 5K a month just from kind of property, and then just not worry about it. Just leave it. And then I guess in the future it might be something that I look to almost invest and turn it into a bit of a kind of project.
Yeah.
But I think costs of it and the time it takes to properly manage, for me at the moment, is too much. I can't do it.
But it's interesting to hear you say that, because you're in the UK, right? So you could, if you wanted, oversee a project and you could go and do that. But even you're saying, and the reason I bring it up is because we meet with a lot of people over here and they're like, oh, I've heard about, you can buy these properties, you can renovate them, you can refinance them. It's a great way to make money, right? But you have a full-time job, you live the other side of the world, you probably have a family, so it's difficult to take on another full-time job almost when you're doing that. So I'm the same as you. For me, it's all about passive income, as little work as possible. Buy something. If you buy well, it'll be tenanted. You'll get a good tenant. It'll always be tenanted. You'll get rent on time. So for me, I think the biggest part is buying well, and you eliminate a lot of problems around tenants and repairs and all of that sort of stuff. So buy something well, long-term let, and let time in the market do the job.
I completely agree. I think I should have taken that advice, probably.
You've got to, it's my second plug. You've got to read the ebook. And it's not an ebook, it's a real book. It's not even an ebook. But it does say the Expat Property Playbook, but anyone can use it, right? It's the exact same principles, whether you're in the UK or not. So
I think you're right. I think for me personally as well, I think if you buy the right property, you eliminate the problems in the future. If you buy something that could attract the wrong kind of tenants, that attracts more problems, etc. And we find this when speaking to our kind of clients as well. Some of our clients, when they ask us, can I expense this? Here's what's happened. I'm thinking, wow, that's not. I count myself quite lucky, to be honest, when I hear some of our client stories.
Yeah, and that's it. It all is eliminated by buying right. So if you pay rubbish money, you get people that can't do a job properly, right? Or if you buy a cheap pair of shoes, you have to resole them, or you have to buy another pair, or same with trousers or shirts or whatever. So, or anything, a cheap phone, it all breaks, and then you pay the price further down the line when you have to buy it again. And I think with such a big purchase as a property, you're better off actually. Even if I've got £50,000 and I want to buy a £200,000 house in Manchester. Okay, maybe you're going to have to go a bit further out. So maybe it would be a slightly poorer quality of tenant. Maybe you'd be better off actually saving for a bit longer so you can get somewhere a bit better that's going to eliminate all that stuff further down the line. But it's difficult when you see lower value properties will often have much higher yields. And I think a lot of people get sucked into that sort of, oh, well, it's a 10% yield. Well, okay, well, what if you're changing tenants every 4 months or paying 500 quid every time you change a tenant because you've got to repair it, and it just erodes it, right?
You do have to take a step back and look at the potential pitfalls of the investment and kind of plan for those scenarios as well.
For sure. There's lots to think about. So are there any sort of upcoming changes to taxes that people should be aware of, whether that's personal or company ownership?
So a big one kicking off from next year, April 2026, will be MTD, which is HMRC's mandate for quarterly updates and then a final tax return as well.
Quarterly updates.
Imagine 4 times the filings or 4 times the admin, right?
Yeah.
So getting your income, expenses, net profit together, sending that to HMRC on a quarterly basis. Now, HMRC say it's good because you keep records on a digital basis and you're more up to date. To be fair, as a landlord, you're then able to see your cash flow, right? You're able to manage the property business in real time. So perhaps there are landlords that are already doing this. They have their spreadsheet, they have their software, they're kind of ready to go. But for a lot of overseas landlords that may have a passive investment, it is going to create a bit more admin and accounting required.
Yeah.
And HMRC have mandated that you must use software. So a little kind of plug to Taxed.
Yeah.
So software like Taxed must be used. And this is where the reason is I guess is because the records must be stored on a digital basis.
Yeah.
And it will affect anyone that has a national insurance number. So for some of your clients that might just be an overseas investor, never worked in the UK, they don't have a national insurance number, they're fine. They're not going to be included within
this. Is only in personal ownership.
Personal ownership, yeah. Personal ownership.
But then anyone with national insurance has got to do it.
Exactly that. So as we're recording this, April 2025, it's anyone that has a national insurance number. And there are special exclusions if you're in a location which perhaps has no internet or you can't access any software, then you are also excluded.
What if I don't have a phone? Would that count? I don't have a phone, so I can't get online.
I think if you have a PC, then, well, I guess if you don't have a phone or a PC, then yeah, that would count.
I'll try that.
That is something that we are seeing, that it is going to cause a lot of additional work for landlords.
Yeah, for sure.
And I think landlords and accountants as well. So if your clients are working with an accountant, it's probably best to make sure that they stay up to date with some of these changes. How are they getting ready? Are they using software at the moment? Are they filing on paper at the moment? How can they kind of stay ahead of these changes? Now, the key kind of thing to note is that from next year, it's landlords that earn over £50,000 worth of rental income. So that might be a small percentage of landlords that have a portfolio of properties. Then from the year after, it drops to 30,000, and the year after that, it drops to 20,000. So April 2028, if you have £20,000 worth of rental income, you need to file on a quarterly basis. So that could just be one property, which earns 1.8 grand per month.
Yeah.
That's your gross rental income. So not after expenses, the rent that you receive.
And I guess then that would be, people can use your platform and you can allow, help them to do that.
Yeah. So that's where our vision is, that it becomes autonomous with software. So just keep a separate bank account for your rental and property income in the UK, and then using software like Tax, we'll connect with that bank account and have your quarterly filings automatically complete so that
Awesome.
there's no extra admin. That's our aim. You don't have to send your bank statements over. Someone has to prep it. No, it's just connections, send the data. And at the end of the year, when you do the full tax return, it's already ready. We're going to call it the one-click tax return.
Yeah, that's good. Catchy. I like it. I think as well, this, this conversation goes to show the importance of building a proper team around you when you are, if you're serious about building a portfolio and buying property, because it is so much easier when you've got experts in your corner. If you're boxing or whatever, you don't go out there on your own and then I was going to say half time, but at the end of the round you don't go back to your corner and get your chair out and dab your head down and put some Vaseline under here and give yourself a pep talk. You've got specialists in all of those areas that will help you, and I think that is so key with property, is not to try and do it all on your own, even though you might think you'll save a bit of money, because I guess you would, but you'll lose out on peace of mind, time, money in the long term if you mess something up. So I think it's crucial to have an accountant, a mortgage broker, a good managing agent, that
100%.
sort of,
100%. You've probably seen stories where it's gone wrong. From a tax perspective, we've seen individuals where they've not claimed allowances, they've not claimed expenses, or they've just missed deadlines, and now they've got HMRC sending letters every week where they've got interest piling up and things like that. So that's where, just having the right experts in your corner, like your analogy, 100%.
Well, a story about it, we met with a gent a couple of years ago, maybe 2 or 3 years ago, and we had a discussion with him, and he was looking at buying a buy-to-let, and we talked about mortgages, all the basics, all of that sort of stuff, and he sort of said, well, I'd like to buy down on the south coast or somewhere down there. And we said, well, yeah, if you're going to live in it, but what are the fundamentals? We're coming out of COVID now. Those things went up in value a lot over COVID. They're probably going to fall a fair bit now, so maybe better off looking at a city where people are going to be returning to work, etc. And he said, great call, thank you. And we never heard from him again until a few weeks ago, and he said, after the call, I listened to what you said about mortgages and all that sort of stuff, but I went and bought this place down south, and I've been trying to sell it for 6 months, and it's reached a point now where I've lowered the value so much that the value is only just above what is owing on the mortgage on it. So it's almost negative equity, which I guess if you're going to live in it and it's a long-term thing, not so bad, but it was an investment and now he's trying to offload it and is going to take a bit of a hit, I guess. So it's about being smart and taking your heart out of it, because it's a head decision ultimately, isn't it?
That's very true. I think sometimes with these kind of things, it's easy to go with the emotion.
100%.
I had a similar case actually when I sold a property a few years ago, and then it was a personal home, but it was in negative equity. Painful, but we had to sell it at the time. If I could have kept it and rented it out, that would have been perfect. But it's those cases where the emotion gets involved and all kind of personal reasons, right?
Yeah, again, which is fine if you've got good, legitimate heart reasons for doing it. But if it's a mix of both, then it's not always going to work out. Unless, of course, the place you want to live in most is also a really good investment location, which I think for most people probably isn't. I think we've had a good chat there.
No, it was great. It was great. Thanks for having us on.
Yeah, thank you very much. Enjoy the rest of the trip, and hopefully we'll get you out to KL at some point and we can start doing some events together. We'll put a link down below, I guess, to sort of where people can get in touch with you guys if they want to have a chat, and hopefully you can add some good value to them.
We'll good. And it would be great to meet in KL and can host a kind of joint client event.
Yeah, that would be awesome, and we should do a webinar next, but we'll leave you to it. Thank you very much, Arjun.
Awesome.
It's been good chatting.
Cheers, Callum. It was great to chat.
Bye.